Welcome back to TalkTickers, listeners. Today, we're going to be diving deep into PayPal's Q3 2024 earnings call. And let's be honest, it wasn't exactly the news that a lot of us were hoping for, that stock dip this morning.
Yeah.
It's got a lot of people talking, and not really in a good way. But, as always, we're here to unpack what's really going on beyond just the headlines. To help us do that, we've got our resident financial whiz with us. They live for these earnings reports. It's almost scary.
Well, somebody has to make sense of these things. And honestly, this one's got even me scratching my head a bit. PayPal pulled off some impressive operational wins this quarter. Yet the stock takes a tumble. There's a story here, folks. And we're going to figure it out.
That's what we're here for. So PayPal's Q3, it's kind of a mixed bag. We've got positive operational achievements, but they're clashing with some serious investor concerns. There's a shift in strategy brewing, some interesting new partnerships, and even a glimpse of what's to come at PayPal's Investor Day in February. Buckle up, everyone. This is going to be a ride.
Yeah, let's start by giving credit where credit is due. Before we dive into the whole stock drop drama, let's talk about the good stuff. Operationally, PayPal had a pretty solid quarter. Payment volume is up, revenue's growing, free cash flow is strong, and their non-GAAP earnings per share jumped a healthy 22% year over year. On paper, it sounds like things are moving in the right direction.
Right. You'd think that would translate to happy investors, not a stock nosedive.
Yeah.
So break it down for us. What do these metrics really mean for the average investor? What's the significance?
Okay, so increased payment volume. That tells us that more individuals and businesses are choosing PayPal. That's a good sign for their network effect. The more people use it, the more valuable the platform becomes. Revenue growth is pretty straightforward. It just means more money coming in the door. And free cash flow. That's the money they have left over after covering their operational costs. A healthy free cash flow. That gives them flexibility to invest in growth, buy back stock, or even issue dividends down the line.
Okay.
Yeah.
So far, so good. And let's not forget those shiny new products they launched this quarter. The redesigned mobile checkout, for example, and Fastlane, which is designed to capture those quick guest checkout transactions. They're reporting positive impacts on conversion rates. That's got to count for something, right?
Absolutely. Conversion rates are crucial in the online payment world. The easier and more appealing it is to complete a purchase, the better. Seeing improvement there is definitely a win for PayPal.
All right. So we've established that operationally, things aren't looking so bad. Now let's address the elephant in the room.
Why did PayPal's stock take such a hit?
The million-dollar question. There are a few pieces to this puzzle, but the most prominent is the revenue miss. Wall Street hates surprises, especially when those surprises involve falling short of projected revenue.
So what happened? Were their forecasts just overly optimistic, or is there more to it? It wasn't just a case of bad forecasting. It seems more like a calculated miss. Their subsidiary Braintree, which handles payment processing for larger businesses, actually slowed down its revenue growth intentionally. They're prioritizing what they're calling profitable growth over just growth for growth's sake.
They kept using the phrase price to value during the call. What does that even mean in this context?
It means they're restructuring agreements with some of their larger merchants, focusing on deals that will be more financially beneficial for PayPal in the long run, even if it means a slight dip in revenue in the short term. They're basically trading some volume for better margins. It's a long game strategy.
So they're betting that these stronger, more profitable partnerships will ultimately be more valuable down the road, even if it doesn't look that way right now. Is that a risky move?
It's definitely a calculated risk. And to be fair, it's not necessarily a bad strategy. It just spooked investors who were expecting to see those revenue numbers climb higher. They weren't ready for the slow and steady wins the race approach.
And it's not just Braintree, right? There's also the issue of shrinking interest on customer balances.
Ah, yes. Remember all that talk about interest rate hikes? Well, these are starting to reverse, which means less passive income for companies like PayPal that hold large customer balances. It's simple math, really. Less interest, less money.
So it's a double whammy. Slower growth from Braintree, coupled with less passive income from interest. I can see why investors might hit the panic button.
It's a knee-jerk reaction for sure, but understandable given the current market climate. However, this is just one chapter in the PayPal story. We need to look beyond the immediate stock reaction and consider what this all means for their future.
Exactly. One earnings call doesn't tell the whole story. There's a lot more to unpack here about their long-term strategy and growth potential, and that's what we'll be doing in part 2. So stay tuned, folks. Welcome back to TalkTickers, everyone. We're still dissecting PayPal's latest earnings call. And it's safe to say there are some mixed signals here. But, amidst the stock drop and strategic shifts, there are a few bright spots that I think are worth exploring.
Absolutely. While that whole price to value approach might be causing some short-term jitters, PayPal isn't just sitting back and waiting for the market to adjust. They're actively pursuing new avenues for growth. And that's where things get really interesting.
Okay. Let's talk about those durable growth levers they kept mentioning.
Mhm.
What are those exactly, and how do they translate into real-world action for PayPal?
Well, it's more than just a buzzword, that's for sure. Durable growth levers signifies a shift away from chasing those fleeting trends and towards building a more resilient and adaptable business model. Think of it as creating multiple engines for growth, each capable of weathering those market fluctuations.
So less reliance on a single source of revenue,
Hmm.
more diversification. Makes sense. But what are some tangible examples of these levers in action?
Well, their partnerships are a prime example. We're talking about collaborations with some heavy hitters like Amazon, Shopify, and even Fiserv, a titan in the financial technology world. These aren't just handshake deals, they're strategic alliances that expand PayPal's reach and capabilities.
Yeah, those are some big names to have in your corner. It definitely sends a signal that PayPal is serious about securing its place in the future of digital payments. But these partnerships, are they enough to offset the potential headwinds they're facing?
That's the billion-dollar question, isn't it? Partnerships are just one piece of the puzzle. PayPal is also making significant investments in its own product ecosystem. And that brings us to two key areas: PayPal Everywhere and the evolution of Venmo.
Okay, let's unpack those. Starting with PayPal Everywhere. It sounds ambitious to say the least. What's the vision here, and how does it fit into their overall strategy?
Think of it as PayPal's attempt to break free from the confines of just the checkout button and become a more integral part of people's daily financial lives. They want to be your go-to for both online and offline transactions, bridging the gap between digital and physical commerce.
So it's about becoming more like a traditional bank, offering a wider range of financial services.
Precisely. They're pushing their debit card hard, offering cashback incentives, and even launching a major marketing campaign to change how people perceive PayPal. It's no longer just a convenient way to pay online, but a comprehensive financial tool for managing your money.
I'm intrigued by this strategy, but it's a crowded market. How do they plan to stand out and attract users,
Mm.
especially with established players already dominating the space?
Well, they're leveraging their existing user base for starters. Millions of people already trust PayPal with their online transactions. The challenge is to convince them to make that leap into everyday spending. That's where the debit card and the marketing push come in.
And they're reporting some early success, right? Over 1 million new debit card users since launching PayPal Everywhere. And those users are actively using their cards for everyday purchases.
That's the key metric to watch. If they can convert those online users into active debit card users, that opens up significant revenue streams for PayPal. Transaction fees, interchange fees, the whole shebang. And those debit card users are also more likely to choose PayPal at checkout when shopping online, reinforcing their core business.
Yeah, it's a clever way to build on their existing strengths while venturing into new territory. But they're not limiting this to the US, right? There's talk of expanding PayPal Everywhere into Europe next year.
A strategic move indeed. Europe is already quite comfortable with contactless payments and digital wallets. PayPal has a real opportunity to make inroads there and gain a foothold in a massive market.
Okay, so we've got PayPal aiming to become a bigger part of your wallet with PayPal Everywhere. But then there's Venmo, their peer-to-peer payment app. It's been around for a while, mostly known for splitting bills and sending money to friends. But it seems like PayPal has bigger ambitions for Venmo.
Oh, absolutely. Venmo has the potential to be a powerhouse for PayPal. They've got a strong brand, especially among younger consumers. And they're starting to leverage that brand recognition to become more than just a P2P app.
Right, they're pushing the Venmo debit card as well, which is seeing solid growth. And then there's Pay with Venmo, their answer to, well, Pay with PayPal. They seem determined to make Venmo a viable payment option everywhere.
Precisely. And by bundling it with PayPal checkout, merchants essentially get both options in one package. It's a smart way to leverage their existing infrastructure and expand Venmo's reach.
So if they can successfully grow both the Venmo debit card and Pay with Venmo, that translates into some serious revenue potential for PayPal.
Imagine transaction fees from millions of Venmo users making everyday purchases. It's a very attractive proposition. And it's a big part of why PayPal sees Venmo as a potential multi-billion-dollar franchise. It's not just about sending money to your roommate anymore. It's about becoming a central part of your financial life.
And they're not just sitting back and hoping to the best. They've redesigned the Venmo app, making it more user-friendly and adding new features. And get this, they're actually doing marketing for Venmo now, something they haven't done in years.
They're serious about making Venmo a major player in the digital payments space. And with its popularity among younger demographics, it could become a powerful engine for growth in the coming years.
All right, we've covered a lot of ground here, from PayPal's operational performance to the stock dip, their strategic shift toward price to value, and the potential of PayPal everywhere and the evolving Venmo. But let's talk about the future. What's the outlook for PayPal as we head into 2025 and beyond? Welcome back to TalkTickers listeners. We're wrapping up our deep dive into PayPal's Q3 2024 earnings call, and I have to say, this one's been a roller coaster.
Yeah, definitely a lot of twists and turns. We saw some strong operational performance, but then juxtaposed with, a pretty significant stock drop, it really highlights the complexities of the market and how investor sentiment can sometimes overshadow, actual tangible progress.
Yeah, we've explored those operational wins. We dissected the reasons behind the stock dip, and we examined PayPal's strategic pivot towards that whole price to value thing. Plus, we delved into those intriguing initiatives, PayPal everywhere, and the evolving Venmo.
It's clear that PayPal is kind of at a crossroads right now. They're making some bold bets, some of which are causing some short-term pain, but they're also laying the groundwork for what could be a very different PayPal in the years to come, and potentially a more profitable one.
So after all this analysis, what's the key takeaway you want our listeners to walk away with?
That's the million-dollar question, isn't it? And there's no easy answer. This is a company in transition, shifting away from that growth at all costs mentality to one that prioritizes sustainable profitability. Will it pay off? Only time will tell.
It's a gamble for sure, but they're not just throwing darts at a board here. They're being deliberate and strategic in their approach.
Exactly. They're innovating, they're forming these key partnerships, and they're making tough decisions to position themselves for the future. Whether those decisions ultimately lead to success, well, that's something that we'll all be watching closely.
So no crystal ball predictions today, but definitely plenty of food for thought. What should investors be paying attention to as we head into 2025? What are the key indicators of success or failure for this new strategy?
I'd say keep a close eye on transaction margin dollar growth, specifically excluding interest income. That metric gives us a clearer picture of their operational efficiency. Independent of those fluctuating interest rates, they're projecting continued growth there, which is a positive sign.
Okay, so signs of a healthy core business, even if the overall revenue picture is a bit muddled right now. Anything else that investors should be watching?
Yeah. Pay attention to the adoption rates for PayPal everywhere and those new Venmo features. If they can successfully convert those online users into active participants in these initiatives, it could really be a game changer.
Right, those are the potential growth engines, the ones that they're banking on to fuel their future. But it's not going to happen overnight. Patience is key here, both for investors and for PayPal's leadership.
Absolutely. These things take time. It takes time to build new habits, to scale up new products, and to really see the full impact of those strategic partnerships. It's a marathon, not a sprint.
And let's not forget that wild card, the overall economy. A downturn in consumer spending could impact everyone, including PayPal. It's a factor that's outside of their control, but one that could significantly influence their trajectory.
Very true. But on the flip side, if they can successfully execute on their vision for PayPal everywhere and Venmo, those initiatives could provide a buffer against those economic headwinds.
So lots of moving pieces, plenty of uncertainty, and a healthy dose of potential. Sounds like PayPal's story is far from over.
Far from it. This is a company in transformation, and that transformation is going to be fascinating to watch.
And that's why we do these deep dives, folks, to go beyond the headlines, understand the nuances, and equip ourselves with the knowledge to make informed decisions.
As always, we encourage you to do your own research, stay informed, and form your own conclusions. Don't let the headlines dictate your investment decisions.
Well said. And with that, we'll wrap up this deep dive into PayPal's Q3 2024 earnings call, as always. Thanks for joining us here at TalkTickers. We'll be back soon with another insightful deep dive into the world of earnings calls. Until then, happy investing.